Hi fans, welcome back to my channel. This is Alex. Since not everything is drama, today I'm going to react to Everything Money and in a specific video called Stock Market Economy Update February 2022. It is important for me to give you this message, well this video, sorry, not a message, because it comprises a lot of good messages for investors. And I like you to hear Paul, which is one of the guys there. He's not the host, but he's the analyst. And you can tell me what you think about this reaction. If you like it, which is mainly positive, then let me know in the comment section so I can do more. And well, enjoy. I hope you enjoy it. Thank you. Get right on it.
Learn how to invest and go find 20 to 40 companies that fit your criteria with a portion of your money. The rest of it should go to, don't worry about month to month what's happening. Like this video,
what he's saying is basically value investing. He's talking about 20 to 30 or to 40 companies that you consider a good value play. And how do you do that? You need to do the hard work, the research. You need to read the 10Ks and the 10Qs, go in depth into these documents, which are the basis for any investor to know the company, the numbers, to know if the company is making any profit, to know the margins, the risk, the core business, everything you need to know. If you want to be a value investor, then there. Also, you can follow the news of the company. You can go and see some videos. We have a lot of resources right now that can help you do that. So yeah, if you want to be a value investor, then you need to put in the work. It's not going to be very easy as to follow an ETF, as he says. If you don't know what you're doing or you are brand new, then follow a low-cost ETF and dollar cost average, which is going to talk about that in a minute.
Great video, just to understand, but you shouldn't care. If you're 30 years old and saving for retirement, what does it matter to you how February was? What does it matter to you how 2022 was? It shouldn't matter to you. All that matters to you is when you're 65 or 70 ready to retire, that's when it should matter to you. As you're getting up there, alter the way you invest because you don't want to be as much in the stocks, etc.
Okay. This is very, very important for us in our channel as bottleheads, which we are mainly that, to know that having a low cost ETF and holding for life and dollar cost averaging. What is dollar cost averaging? Is buying when the cost goes down and your medium cost is higher, then you go into the ETF or the stock of that represents that ETF, and you buy it, and then your cost is your average is going down. That's dollar cost averaging. So what he says is don't panic sell. If you see a crash or a correction in the market, then this is a benefit for you because it's a discount. If you like the company or the ETF before, then you're gonna like it more if it's on sale, and even more right now that some of these ETFs are on fire sale. Another good thing that he's mentioning right now is the low cost expense of an ETF. What we have here in this channel is we always go deep into BT and SPLG, which is one of the ETFs that follow the Standard & Poor's, and the cost, the fees they are charging is 0.03%, and BT is 0.08%. I understand that Vanguard is lowering this cost much more, so it's going to be very beneficial for us as investors. So basically, if you do that and you hold and dollar cost average, you're going to be fine in 20, 30, 40 years when you retire. So that's what Paul is saying right now. And it's a very good message.
Bottom line is, I've been saying market's been overpriced for 5 years now, and I've been looking wrong this entire time. I'm fine with that. But the best investors in the world agree with me with their money. Look at what they do, not what they say. And Warren Buffett's staying on the sideline with $100+ billion in cash.
Why is he doing that?
Because he has nothing to buy. It's a very difficult market out there. Oh, he's old, he doesn't get it. Okay. To me, he's old and gets it even more.
Yep.
He's been around.
He's seen it. He's seen the ups. He's seen the downs.
Munger said recently, months and months ago, they've never seen a harder market than they see today.
Mm-hmm.
And the guy's 98 years old.
You know what's
okay? A few messages here that probably some youngsters don't understand is that experience makes for a good investor. Munger and Buffett have lived for many corrections, and they've seen the flow of the market, and they've been very well, in general terms, very successful with their investments. So what they're saying here is that if these people that actually know a lot more than even them, are doing great by following simple rules and not being geniuses, just being disciplined and having a method and a process, then you can do that and apply it to your method and to your own process. So right now we have here an article from the Week in Australian when they quote, Munger, and he says that right now our market is crazier than it's harder for investors to buy into good companies because some prices represent 35 times earnings, the P ratio. And so it's harder right now to get the returns you want. That's basically what this article says, which is very well written by the source is, well, the one that wrote it is Glenda Corporal. You can see it at Australian.com. That's the source. I recommend you go and read it because it talks about a lot of topics, and he gets into the US and China relationship where he understands that the US needs to get along with China to have a prosperous world in the future. And I get that, and I think that's what they need to do. They need to put aside all their differences, and in a moment in time they will. So I'm just waiting for that to happen. But basically, that's a good article to read, and it talks about what Paul is referring right now.
It's my favorite part. So everybody says, who's your favorite investor? And I'm like, by default, it has to be Charlie Munger and Warren Buffett because, guys, look how lucky we are. If you believe in this, you literally have a track record of somebody's entire...
Also, Strongman is one of my favorite investors. He's my buddy, but he's amazing.
Investing career.
Whole life.
Go back and look at. That is incredible. You don't usually get that. That's amazing to me. So by default, just go and look at their history. Today I was reading the 1962 annual report that Warren Buffett wrote. It's incredible just seeing how consistent he is. But he's saying the same things back then, same fundamentals and principles that he's saying now, and it's worked for him for a very long time.
So a lot of our viewers, Paul, they don't have the comfort of sitting and waiting and sitting on cash like you or maybe Charlie.
That's why dollar cost averaging and low cost ETFs is the way to go.
This is the number one question we always get. But Paul, you're saying things could get really bad. Yep. Why would I be putting money in?
No, I'm not saying things could get really bad. Things will get very bad.
I see. It's even scarier when you say it like that, of course.
Well, it will, and that doesn't mean I'm not optimistic. Because guess what?
Why he's saying that? Because history tends to repeat itself. So right now, what Paul is seeing is the same issues recurring and happening again. So he understands by his age and experience that things can get rough and there will get rough and nothing is certain. So that's why he applies a method and process to his investment life or his investing process or method also.
0809, I have the emails to prove it. I was the only good phone call my guys at Merrill had, and my accountant and state lawyer kept telling me, like, man, you're so big on the market. I'm like, yeah, because we're at all-time lows here in the last 10 years. Well, not all time, but we were at huge lows. I'm like, this makes perfect sense to me.
He lived through the dot-com bubble, so he's talking about that, and he recalls when things were super high. All the online companies were doing well, having crazy valuations. So when the market really crashed, because that was one of the crashes in history of the market, of the stock market, then he got into certain positions and people thought he was crazy because he was buying when everybody was panic selling. And he also talks about when the stock market is in all-time highs, like right now, what right now is correcting itself. It's probably going to crash. I don't know. I don't have a crystal ball to know that, but it is probably going to get rough. So he says that right now he's buying, and when everybody was right now he's waiting, and I'm buying because it's going down. Well, when everybody else was buying, he was selling or waiting and putting puts or margin calls, whatever the situation was in that time and moment. So he explains that process, and I think I concur with his assumptions. I think when people are crazy and they think the stock market is always going up, then things are gonna get bad for these guys. And you know, many examples of that. Jeremy the Fufu, Chris Saint, Meat Bread, all of these guys that sold right now because they think were in a super crash and it was just starting. Then Paul was laughing at them, probably secretly laughing at them. So and Strongman was making videos. This happens, and it shows that having a process and being calm and not panic and buying and selling is buying and selling is the right thing to do.
To buy. And there'll be a time that happens again. There'll be a time when the viewers out there are saying, gee, Paul, you say buy every stock and they don't go up. Okay. Yes, that's correct. I blew Seth's mind with I said, as a value investor, I will always be perceived to be wrong.
Yes.
Because when things are very good, I'll say don't buy. When things are very bad and look the worst, I'll say buy. Either way, everybody's going to disagree with me. And that's the point of being a value investor. It takes a certain arrogance in a way.
Confidence.
Right? It gets confidence of saying, listen, I understand cash flow. But you shouldn't worry about it. Dollar cost average every month, and you'll wake up 30 years from now a very, very wealthy person. Like, my good friend Matt, one of our good friends, he's my chess coach, and we've become very good friends. The other day, he said something. He was asking me about shorting the market, why I do it, etc. And then I said to him, you know, Matt, this is why you invest, you buy, eat low-cost ETFs, and in the future, they'll go up. He's like, I hope. I said, no, I know. He goes, yeah, you're right. I'm like, I don't even question it. The U.S. economy and the stock market will be way better 30, 40 years from now than it is today.
I believe that too.
Okay, that's the point.
My final question is, now that a lot of these high-flying growth stocks have plummeted.
Oh, it's not even done yet. We're not done yet.
Well, then even more so. I get this question in the chat all the time, Paul, is do I hang on or do I let go?
Every time you look at an investment, you're assessing it right then and there. Do I want to own the stock or not? If it's slightly overpriced, but you like the company, stick on to it. Stick with it. If they're growing their profit, their fundamentals, etc. But if you only bought it so the stock price could go up, you could ride that, and it doesn't make sense fundamentally anymore, what are you doing?
You have to sell it.
Hoping.
So right now, well, I'm gonna end it now because all the good messages were put out there. So what he's basically saying is just referring again to his all-time message that being a value investor needs a process, needs a system. It's hard to do because you gotta put in the work, read 10Ks, 10Qs, follow the news, wait and see what is going on with the company, the administration, see if they have a moat, their customers, look if they have competition, fierce competition, etc., etc. And you have to actually look at your market share in a small period of time. So it's hard to be a value investor. That's why my channel is value head, because I'm mainly a bull head, but I still have some positions. A very small percentage of my portfolio is in good stocks, or what I consider good stocks. It doesn't have to be the same for you. But I believe I had to react to this video because it has a lot of value, and I believe Everything Money is great. So you should follow them because they now and then they go out and put out these messages for people who wants to actually listen to them and follow a process and a system, which is essentially good. I don't know about the software. As I said before, I wouldn't buy it right now. I'll probably consider it in the future. I don't know, but that's up to everybody. And if you have the software, then it's fine. I believe it has actually, it is good. If you don't have a screener and you don't know how to do your own models, then it's fine if you join their software. So that's all for me. I hope you like it. I'm gonna put the link in the description of this video so you can watch it through the end. And basically, that's all I wanted to say. I like Everything Money, as I said before, and I consider it a good channel. Have a nice day, and this is Alex. Thank you for being here. Hope you enjoy.